Two of the world's largest oil companies are locked in a battle over one of the world's most lucrative new oil fields. This battle between Exxon and Chevron centers on the seas off the shores of Guyana, a tiny country in South America that's home to the world's fastest growing economy, growth that's driven almost entirely by oil. The outcome of this corporate battle could determine control over one of the world's most profitable new energy deposits and the future of Chevron itself. At the center of this battle is the Stabroek block, located in Guyana's exclusive maritime economic zone, currently operated by a consortium made up of Exxon, Hess, and China's CNOOC. Altogether, Stabroek holds more than 11 billion barrel equivalents of oil and gas, worth hundreds of billions of dollars. In 2015, the Exxon-led consortium hit oil at Stabroek's Liza field, which was the world's biggest oil discovery in decades. But it was a discovery that almost never happened. Exxon had actually secured exploration rights to Stabroek back in 1999. But the project lingered for a decade and a half as Exxon executives balked at the decision to bet hundreds of millions of dollars on a well that had a low probability of success. It features difficult geology, including the presence of what's called a stratigraphic trap. But with oil abundant nearby in Venezuela and Suriname, some in Exxon thought pursuing the high-risk, high-reward proposition was worth it. New technologies and clever financial engineering ultimately made exploration possible. And here's how they did it. Mid-level employees at Exxon devised a way for senior executives to sign off on exploration of the Liza well at minimal upfront cost. Exxon would sell stakes in the concession to strategic partners, who would then pay for the initial exploration. Now, Exxon already had Shell on board and had been a co-investor in the field since 2008. But as Exxon sought to bring more partners into the mix in 2014, Shell bowed out, selling its stake back to Exxon. But Exxon managed to bring two new players on board, Hess and the state-owned Chinese company CNOOC, which acquired minority stakes in the block. And it's these companies that would pay for the initial well exploration. Exxon managed to pull all this off before a deadline that would have returned the concession to the Guyanese government and put the entire project in the dustbin. Its bet on Stabroek in Guyana quickly paid off. 17 more wells have been discovered since Liza in 2015. Now, Chevron covets the Stabroek block not just because it's abundant in oil, but also because it's relatively cheap. At $35 a barrel, much lower than the price of U.S. shale oil, and with just a 1% royalty share for the government of Guyana, it currently generates around $7 billion in annual profit for the consortium, and its output is forecast to triple by 2027. So when it comes to Chevron's purchase of Hess, its 30% stake in Stabroek is the big prize. That is, if Exxon won't have its way. The Chevron competitor and largest stakeholder in Stabroek quickly moved to squash the transaction. It filed for arbitration, claiming that its contract with Hess gives it the right of refusal over the deal. Now, Exxon and Chevron have partnered in oil fields elsewhere, but Stabroek is a pretty special opportunity, one that Exxon may want to keep out of Chevron's hands. As oil fields deplete elsewhere amid the transition away from fossil fuels, bankable new opportunities are hard to find, and Stabroek is a guaranteed moneymaker. That's exactly why Chevron wants a piece of the pie. Chevron is facing declining profits, and Stabroek may be one of the world's last big oil plays and could be vital for Chevron to ride the transition to a post-fossil fuel future. Without Stabroek, the road ahead for Chevron looks more uncertain and could become rocky. Now, Exxon's arbitration case with Chevron is expected to conclude sometime next year. The stakes are pretty big for Guyana itself, a country that's home to one of the world's largest oil reserves on a per capita basis. Guyana has long been the poorest country in the Western Hemisphere. Its future trajectory relies on sustainably developing its oil riches in a short window. But Guyana itself faces uncertainty. There are fears that Venezuelan leader Nicolas Maduro could order an invasion of Guyana to distract from his election controversy. And Guyana itself faces general elections next year. The question of who benefits from its oil riches is a divisive political one at home and consequential for this racially divided country. For a deeper look at Guyana's predicament, click on the links to our videos on the threat from Venezuela and our deep dive into the politics and economics of Guyana's newfound oil riches.